My lumps, my lumps, my lovely lady lumps. Oh ho, hey guys, hey. Good morning, good morning. How are you? Hope you're doing well. Hope you're doing well. It's a wonderful, wonderful day. It is a good morning, isn't it? All right, so today is D Day, okay, or T Day. The idea of having the expectations of realized evil unfolding at 8 o'clock tonight. We're going to see if that actually happens. We've been set up by our current administration to expect shock and awe and world history shifting and changing. So we're going to find out if that's true or not. So this morning, I'm just going to hang out with you until 10 o'clock. I will leave the live stream at 10 o'clock. Okay, so that way we know, understand clearly that there's a definitive end to this one this morning. And I'm going to hang out with you. I'm interested to see what they do in the opening range, just to kind of get a feel for what may or may not be happening tonight. I'm not saying that I'm going to be able to predict whether or not that stuff is going to happen tonight because of what price action does this morning. I'm just stating that risks are very high this morning. Okay, so if you're secretly using what I say during the live streams as confirmation to take a trade, please don't do that today. I'm probably going to be wrong today. I'm probably going to get it all wrong today. So just bear that in mind. So we got about 5.5 minutes until the opening bell. Take a quick little breeze through. We saw overnight during the live stream. Last night you saw we went up to this, sold off. I gave it this. We hit that and then sold off. Went back into yesterday's regular trading hours opening range gap. These are all the gradient levels on that regular trading hours opening range gap from yesterday. I'm trying to keep the annotations very, very short. I'm not trying to fill the chart up with everything that I have on my notepad. I'm just looking for the most salient things that I'm interested in right now. Trying to get back in sync with the marketplace after being away for a little while on vacation. And we worked inside of the regular trading hours opening range gap. It finally sent it higher off the lower quadrant of yesterday's opening range gap. Nice little macro run there. It's probably random. Came back down, touched 9:30 opening price, which is yesterday's regular trading hours opening range gap high. This is the low of it. Consequent encroachment is there. This is where we settled on yesterday's regular trading hours at 4:14 p.m. Eastern time. That's why that level's there. It's just set up for that way, for that purpose of showing today's opening range gap at 9:30. And then we have price using that same fair value gap I gave you yesterday. Look how wild and woolly it was there. Okay, so I'm expecting this kind of stuff today. Just out of the blue, up or down, it doesn't make a difference. I just don't expect it to be clean price action. It's probably going to be dangerous. Let's put it that way. So that way, if you understand what that word means in your language, I'm trying to speak in very generic terms because sometimes my, I guess, slang words doesn't really communicate well for folks that are in other countries. So just trying to say that basically, just be careful and watch this morning. There's a lot of opportunity the rest of the week to let today happen without you participating. Okay, because losing on a day where it's really designed for people to get hurt, it's nonsense. Don't do it. Simple as that. Sold off from here. Look at the bodies, respecting it there. Broke lower, back inside regular trading hours, opening range gap from yesterday. And now we're just sitting inside of it here. Okay, so all of this market structure this way right here, all of this tells me don't touch it. Everybody that participates today and they make money, consider it lottery. Okay, it was no skill in that. It just happenstance. Okay, and I mean that sincerely. So if I call anything correct today, it's because it's happenstance. I wouldn't put anything on the things I'm going to say today with real money. I'm just observing price action with you. The context is I'm away from the markets for a week or so. I'm getting back in the groove. I'm trying to get a feel for what the market's doing. But now I anticipate decoupling today. It's going to do things that wouldn't be so perfectly precise as it would be any other day. So hopefully I've kind of like prefaced it by laying that disclaimer down very succinctly. So 28 minutes. We have a minute and 45 seconds. So you have sell side here. You have a minor buy side liquidity pool here. And the extreme buy side would be here. This inefficiency may be a factor to this morning. To if they want to send it higher, they could come back and revisit this because all of this wick here. This little barrier with the consequent encroachment of this wick. So about right in here. So 24,330-ish. It could see that level. On the downside, they could sweep below here. So I'd have no bias this morning. So that way, usually I come in, I'll say, I think it's going to go here. I think it's going to go there. Right now, I just want to observe what they do. Just studying what they're running for, what their intentions are. Now, think about what Trump's posts kind of like convey. It promotes the idea of uncertainty and fear. So the markets have been selling off a couple times since yesterday. So it kind of, in my opinion, it kind of feels like baited bear traps. So I wouldn't be surprised if they send it higher this morning. I'm not saying that's my bias. I want you to understand that I'm completely neutral this morning. But if you had a gun to my head and said, ICT, what do you think they're going to try to do? It looks like everybody has been primed to go, bearish. My little rotation there. So now we have the opening range. Okay, so consequent encouragement traded to immediately. Open portion here still. This live stream, pardon me, this live stream is probably not going to be all that helpful in terms of teaching. Like I said, I'm just observing with you live, more or less an intel type thing. I'm trying to get a feel for what they may or may not do. And sometimes that's the best thing for you to do. If you have trepidation, uncertainty, concern, you have doubts, and let's just be honest, say you're fearful of the volatility that may come into a marketplace. It's not foolishness. It's not cowardice for you to stay on the sidelines and just observe. I'm not, I'm not trying to be macho man, okay? Because we traded during this, and don't be scared, bro. You're trying to protect your money. All right, so we have consequent encroachment hit here. Minor sell sides right below this low here. If it wanted to go lower, going below this should accelerate speed to get below this low here. For nothing in here is something. It's nothing here for me. If I was trading with my live accounts, I would not touch it yet. Quick look at MES real quick. SMT divergence there. I don't want to put too much weight on that this morning because of the tone of the market, what they're planning or may or may not do tonight. SMT divergence there. So NQ went to its opening range gap, consequent encroachment. Foolery going on right here. So far, we opened at 9:30, ran minor buy side here, left this little short-term high in place. We have yet to take this sell side or this sell side. Weird gaps in my price feed here. Kind of see everyone's really not wanting to participate this morning. We've taken buy side only, sell side has not been taken at all yet. I'm watching this little area in here. If price has difficulty getting above that, that could be a catalyst to send us down just to take the sell side here. And it could accelerate down below here after that. Far lackadaisical price action, no real conviction one way or the other. Mm. To opening price 9:30. This wick here, half of that would be right about there. I'm just rough eyeballing it because I got a lot of lines here. So again, think about what they've done so far. The market has sold off several times yesterday and overnight. We have potential major conflict unfolding tonight, or let's say it this way, a increased measure of military operation. Let's call it that. I'm trying to be very careful on what I say. The With that looming, it builds in a bearish sentiment. You would think it would be bearish, and they sent it out here first. So they took this short-term high out. They still have yet to take any sell side of any importance. This wick has held the down pressure, if you want to call it that, right? The selling pressure. They've held it off and didn't take that low out. So far we're still inside the range defined by this candlestick's low and that candlestick's high. My mind is weighing this out like this. Okay, if sentiment's been engineered bearish because of what's likely or may or not happen tonight, if that bearish sentiment is what they engineered, then this run here would have stopped out anyone that's already short, but they haven't taken any sell side yet. And that to me is a little perplexing because I would prefer it would have done the buy side here, then take the sell side, and then come railroading back over top of this. But they haven't even done that yet. So it's a very difficult read this morning because of that. Shorting weakness, in other words, a breakout below these lows here, that would be a retail perspective, looking for it to break lower with sentiment expectation it's going to be bad. The market should go down because we're going to supposedly, quote unquote, destroy Iran all in 4 hours, they say. That's pretty harsh language. So it seems like they're really trying to sell this whole thing. And because they took the buy side first, I still think that it's likely to get below here and tag that, even if it wants to go higher. If it wants to go lower, then obviously it goes without saying. So what I'm saying at this very moment, unless it can trade above on a body basis, half of this candlestick's wick, the weight of it is sell side and sell side. What I'm trying to explain to you is like it's narrative. Okay, building a narrative using what an economic calendar would influence, what geopolitical events around the world may indicate. Um, Trying to view it from what a retail trader would see it as through fear and greed, and then looking at where we're at. What did they take first? Buy side they took first. Okay, so they have taken no sell side at all on a day when they've engineered bearishness because of all the stuff that's supposed to take place, in less than less than 11 hours from now. So far, zero setups that would have been taken by me at all. Nothing. You have to have protocols and things to keep you from taking action. If you don't do that, you're going to be left to your own emotions, the enticement of chasing price. It sets up terrible drawdown and blown accounts. We were able to get below that little short term low there, but I would have preferred it to be a little bit more animated. Should have did like that. I should have done that first to take that sell side, and then we'll see if it has any interest to explore that sell side there. This one here is a little bit more prominent. So, so far we've taken a buy side and a sell side. Buy side's taken first. So think about it like this: sentiment engineered bearish because of the wartime stuff that they beating their drums saying they're going to destroy an entire country in 4 hours. The market would look at that through the retail lens as, oh, wow, that's probably going to be bearish for the market. That's scary. Let me take myself out of the risk. They take the stops for anyone that's short by running that high here. Anyone that wants to fade that idea and wants to buy strength or buy a breakout, they are trapped long here. So where do they get stopped out? Stop loss here. So now market's neutral. So now it's more prone to show you the real move. They cleared the board on both sides. That's narrative. Key is knowing what you're looking for, a nice strong one-sided draw. When the narrative is clear to you, you can see them taking the opposite side of the market out, unseating them, and then you can watch your price run take off. Here, it's a little bit more challenging. So I guess I was wrong when I said you probably wouldn't learn too much today. you didn't get what I just said, it's probably because you're so new and it seems Greek. It seems like a different language to you. But for the folks who've been around for a while, I'm sure that was helpful to you. Now imagine you got to your charts late this morning. Okay. You overslept, turn on your computer, pull up your charts, and you're looking at this price action right now. What do you see? Do you see something that says, I should be trading right now? Or do you feel like the brakes are being pushed and saying, you know what, let me see what this is doing first? If you have a little bit of self-control and a little bit time in the charts, nothing here says, I got to get in right now. Having very little short-term expectations where you think the market may go and what they may or may not do in price action, that's not enough to trade in an environment like this. The worst thing you can do is, as a inexperienced student or inexperienced trader, is to look at this and say, well, what happens if it goes down there and takes this low out and accelerates and goes lower and takes that low out? You missed that move and you thought it was going to happen. That's that you're just wasting and missing a move. That's what a neophyte, someone brand new, that's the perspective they have because you're forcing this false sense of belief that this is the only setup that's ever going to form. Like this is the last trade in your career and you haven't even started your career yet. That's the fallacy of, you know, learning this stuff. In the beginning, you feel like you got to do it right now, right away, and you want to see proof of it in your own hands. That is not something that's true. You don't need to see it in your own hands real quick. You need to learn how to protect yourself. You have to learn what it is that's going to hurt you. So we already took out that little low there only by a tick or so. Let's see what that low is on that candlestick. 177 half, and this one is 176 half. So it went down one handle lower than that. A little too shallow. I would have been more excited to see it try to make a deeper penetration of that. That's what she said. Mm. In very, very difficult, high resistance liquidity run conditions, just because we can see it likely doing something doesn't provide an invitation for you to get in here and try to trade it because where's your stop loss going to be? Where's your stop loss going to be? If you were trying to short that, where is it going to be and you feel comfortable with it? I wouldn't be comfortable with it, and I'm pretty good at placing a stop loss. So you just got to sit and watch. Take the information in, read the price action, read the tape, get the experience from it. Don't worry about getting paid for it. You're getting the experience. That's the payment. It always is a high yielding reward in that regard. Because if you're wrong, you get the chance to learn what you saw wrong. Learn from that with no monetary loss, no ego, no bruised pride. Hmm. I would like to see it really dive down in there to clear this up a little bit more convincingly. That's a little too shallow for my liking, even for a day like today. There you go. Just like it's listening to me. Look at the wicks here, here, and here. See that? This run here stayed inside of this wick. This wick touched the lower quadrant, or I'm sorry, the octant 0.625. The body stayed at the low of yesterday's regular trading hours opening range gap. That's what that is right there. Okay. Reaching below sell side, reaching below sell side, and then the sell side over here. We didn't have these levels here. All of this price action and what we did here to that sell side there would be hidden from you. You wouldn't be able to see what it is, or wouldn't be able to discern what would be potentially available in terms of short term prognostication. Where do you think it's going to go, and why should you expect it to go there? Majority of your work when you're first starting out, if you're working with a model, before you actually try to implement the model, what you're seeing me do here yesterday and today, um, that's what you're supposed to be doing only. You're not trying to get into a trade. You're trying to read price action, get a feel for what it's likely to do, what levels or PD arrays, what price levels, and what time elements, what kind of like promotes the idea that the market should go in a direction that's foreseeable, predictable, and getting real comfortable with the uncertainty of not knowing for sure in the beginning. Because you knowing what you're looking for, that's a skill set that you're going to have to develop in your own hands. No one can transfer that information. No teacher can do that. I can't do it. No other teacher, no other mentor, nobody, anybody that makes a claim that they promise that they're going to turn you into a profitable trader, they're a liar, because no one can promise that. No one can do that, because you bring to this whole endeavor your own shortcomings, your impatience, your inability to focus, your inability to follow rules. By far and large, humans are terrible at doing that. No matter what culture you come from, following rules is generally a very hard thing to do. And if you don't believe me, look at the signpost that you're driving by every day. You're never following that. You're always going faster. So we had a little bit of a gap in here, faded into it there. If it wants this, it needs to do it in the next two candles. The short term low out here. If I were Phil, I would do it just like this and not take that low. It took this one here. See that? Questioned all the time. And I'll get an email, or for people that are very intrusive, they have my phone number and they send me text messages. Usually they only get a chance to do that one time, and then I block their phone number. Um, you don't have my permission to do that, by the way. It's a little intrusive. It's kind of disrespectful too. Um, but they'll ask questions. Today, you did this, you did that. What would you call today's level of difficulty? 10 being extremely hard, and 1 being very easy. Today, I would call this about an 8, only because it requires a whole lot of understanding of what tends to happen, what can happen, what shouldn't happen, that type of stuff. It's a very experience driven perspective. It's not like a book skill that you can collect from reading somebody's works or watching someone do a live stream. you have to do it in your own hands. You have to feel that uncertainty. You have to feel it and know what it causes you to experience. Feeling missing out, angry if if you look at something you think it should do something in particular detail and it does the opposite of that, or it doesn't do anything at all, just stays stagnant and consolidates. As a new trader or as a developing student of the market, you don't have any of those skills, and no one really teaches that. They don't really push that hard, and I try to do my best to kind of like cultivate that in my students, because that was like the biggest thing for me when I was coming up. I wanted to take away those fearful thoughts, that uncertainty. I needed to know. Like, I needed to know. It's not just I want to be right. I needed to know, and because of all of the difficulty that comes with trading, you're combating your internal demons, and the guy that's part of you, or the gal that's part of you, that derails yourself because you somehow you feel like you don't deserve something in the market in terms of success. You'll self-sabotage, and you don't even realize that that is there. See, like I said, if I was Phil, I would have stopped it right there. And there you go. It's almost like I think like that guy. Isn't it crazy? But developing the skill set of having anticipatory price action skills, of reading what should and should not happen, how certain PD arrays are going to support an idea, a narrative, where price may go, what it shouldn't do, what is permissible, what can price do, and it still look ugly, but it can still work out, in the long run. When I say long run, it means for the price run you're expecting. It doesn't mean like weeks and months. But in the final few minutes here, I just want to recap what I was outlining here, so that way you go away with the right lesson, I guess, if you will. I indicated I had a neutral bias this morning. Okay. I believed that they would run it higher because of the engineered sentiment. We had that run here right from Jump Street. It took a minor buy side there. Got to consequent encouragement of the opening range gap for regular trading hours today. That's regular trading hours, opening range gap high. I'll show you the regular trading hours chart so that we can see it. So here's regular trading hours, opening range gap high. That's the settlement yesterday at 4:14 p.m. Eastern time, and then 9:30 opening price this morning. That's regular trading hours, opening range gap low. Why is it low? Because it's lower than where we settled yesterday at 4:14 p.m. Eastern time. So this is a discount gap. The market opens up immediately in one candlestick, shoots up, and goes to that 70% likelihood of half gap. It does it real quick. Okay. Goes a little bit above it, but fails to get to the next octant level. So is that bullish or bearish? It's not bullish. So the market drops back down into the range defined by that first minute, and then goes a little bit lower. And now we start focusing on yesterday's regular trading hours opening range gap. So what we have done here, from this point here to that point, that's today's regular trading hours opening range gap. Yesterday's regular trading hours opening range gap is all of these levels here. This being the high of it, that being the low of it. So with that said, let's go back into electronic trading hours and wrap this stream up. This punch higher, and then I said, okay, so they took buy side, and I gave you minor sell side, and then the more prominent sell side down here, not the blue one. I made that up as we went to it. I said that if I were Phil, I would stop there and then retrace it pretty deep. This is still in play. This can still get swiped. Excuse me. So they took buy side first on a day that it's engineered bearish. So anyone that's short here or going into the day, they get stopped out. Then breakout artists, okay, that want to be a buyer, they're stopped out with the market running down here. This sell side and this sell side is what's left in play. So they took both sides of the market out first, taking the buyers on a breakout into the market to crush them and unseat those that want to sell short with that bear sentiment. So this run here, it it kind of like cancels the idea that anyone that wants to be short, they don't get to participate in the drop. using yesterday's regular trading hours opening range gap. And here we had this wick stop just above it. That's normal. And then we closed down. The next couple bodies here only stayed at the low of yesterday's regular trading hours opening range gap low. Even though we traded up like this was inside of this wick. So this wick was holding off anything going higher while the sell side here was still in play. After they canceled anyone that's already short with this run here and trapped traders on a breakout trying to buy that run above here, thinking that they're going to catch strength or buying strength. Failure to get to regular trading hours opening range gap low here, and we're just in striking distance, and we're actually at near striking distance for that low right there. There's a lot of wicks in here. That kind of makes it muddy. It still can do it, but it's just it's a harder read for a brand new student. If you're not able to look for these types of things and see it pan out pretty consistent, that doesn't mean every day you got to be right about what you think it may do and where it's drawing to. But if you don't have at least 2 months of consistency being able to just do this without any trades, no demo trading, no paper trading, no prop firm evaluation, no challenges. Okay. If you don't do that, you're the reason why you don't know how to trade and why my concepts are not working in your own hands. There's your run to the sell side. Okay. So again, gun to my head, I told you what I think it would do. No setups, no trades, just reading the tape. Look at the title of the live stream. This is what you're supposed to be doing as a new student. If you can't do these types of things, or if you're scared to death, even when you're trading a demo, because you think, and it's a true thing. It's weird how students many times they'll contact me and they'll say, I get so nervous, and I'm even in a paper trading account because you're placing so much emphasis on being right when you don't have any skill set to base it on. So you're expecting to win the lottery every single day of your life. That's what you're doing. That's the equivalent. You're trying to hit the Mega Million or the Powerball every single day it's available to be played. And that's not realistic. You have no experience. You have no baseline to base on what you think a model should deliver and what price should be doing because you haven't done this skill set of managing where your expectations should be, looking for it. Okay. So hopefully you found something in this today that was helpful. Um, if not, I apologize. I was given what we see here. This is all I could work with. So until I talk to you next time, wish you good luck and good trading.